Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Tonkovich, Managing Director and Portfolio Manager of Brandywine Global, to discuss the state of growth versus value investing and why investors should look to value. Stephen, it's great to have you with us. Welcome to Trade Talks.
Thank you, Jill. Glad to be here.
You got it. Can you tell us a bit about Brandywine Global and its investment philosophy?
Sure. Brandywine Global has been an investment management firm, been around since 1986. We got investments in equities, fixed income, and alternatives. We're a specialty group under Franklin Templeton. We have the long-held belief that investing in value stocks is the best long-term return opportunity. We focus on companies with low P ratios, low price to books, and higher quality. And these companies tend to outperform over the long term. And thus, investing in these companies, we view as the best place for investors with a long-term perspective.
Can you share your perspective on the state of growth versus value investing and why investors should look to value?
Certainly. Value stocks had been out of favor for pretty much a decade when we'd had an environment of low interest rates, which were very favorable to growth stocks. In late 2021, when the Fed started to be more aggressive with inflation and started to increase interest rates, that led to a difficult environment for growth stocks. Growth stocks tend to be focused on future products, future revenue streams, and that discount rate tends to adversely impact those growth companies. With value companies not having that dependency, value stocks started to outperform. And we saw some strong performance from value, which were very much set for that environment. In addition, the spread between value and growth companies based on P ratios and price to book ratios was very extended. It came down since the peak in late 2021, but is still around the same level as it was during the tech bubble. And we saw what happened with value and growth after the tech bubble. We think there's still very strong potential for value, even though growth has had a rebound in the past few months. There's still a very deep discount for value companies, and that we feel that environment is very much in favor for value.
Franklin Templeton launched the Brandywine Global Dynamic U.S. Large Cap Value ETF, ticker DVAL, last October. Why active management for ETFs and why DVAL?
Active management for ETFs is very important, since if you have the opportunity to go into indexing versus active, sure, there's the attractiveness of the lower fees, but if you choose a manager who has a long track record and experience and a proven record of outperformance, that slight differential in fee is going to be overwhelmed by the longer term return potential. So DVAL was launched with the expectation of providing active investment in a large cap value space. This team has 15 years of active record with the portfolio managing in this manner. It also has a team which has over a quarter century of experience. And the additional interesting feature or unique feature with DVAL is a shifting tool. DVAL is based on a dynamic shifting tool which moves from broader value to deeper value depending on the environment based on price to book ratio spreads. And when those spreads are in higher or lower levels, that quantitative tool will shift the portfolio towards or away from deeper or broader value. Currently, it's in a broader value environment, which we have historically seen is the proper structure for the current environment. And we also feel that in this very emotionally charged market, it's better to have a quantitative approach than an emotional fear-driven approach. And we very much stick with our quantitative tools as we manage this portfolio.
And finally, how can investors use DVAL in their portfolios?
Any diversified portfolio should have a combination of value, growth, large cap, small cap. DVAL is an excellent choice for a pure large cap value exposure with a deep team of investment professionals behind that portfolio. We've had consistent returns historically and believe that in this ETF format, we will be able to continue to deliver the strong returns we have to our clients in the past.
All right, Stephen, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.